A splendid evening it is to you viewers. Welcome to Special Focus, right here on Equity Access, your area of perspective on stock market developments and on developments in the Zimbabwean economy. I'm Ibn Mabunda. Let's go. On Special Focus tonight, Untu Capital, a listed company on the FinSEX, today paid interest on its bonds. Story being, in the year 2017, December to be precise, they did engage in a venture which was the first ever venture to actually invest in bonds through a mobile facility, which was known as UGain. And so they set a target of $1 million with an oversubscription to the amount of $1.75 million. And if you did invest in that venture, well, today was payback day. Now, in a circular from the central bank, RBZ attempts to deepen USD circulation, and so they add a USD transaction settlement facility to RTGS platform. What this simply means is you can now receive and send US dollars from your RTGS account without necessarily having to open a Nostro FCA account. Meanwhile, Masawara Sable Chemicals to invest $25 million in Zimbabwe over the next 2-year period. Now, Sable Chemicals currently supplies 60% of Zimbabwe's fertilizers needs. Now, their current production capacity is sitting at, their current production is currently sitting at 32,000 metric tons. They intend to increase to 100,000 metric tons by year end, and by 2022 to actually have reached 200,000 metric tons. And now this should go a long way in meeting the production requirements for farming in Zimbabwe, which currently sit at 600,000 metric tons. Meanwhile, First Capital Bank, formerly Barclays Bank, issued a cautionary statement today on the Zimbabwe Stock Exchange to the effect they have put aside plans for the unbundling of their properties business, which is Cassava, until further notice. Plus, we look at the trade figures for the year 2018. Just a sneak peek, we are currently sitting at a trade deficit of $2.5 billion. Question is that what Zimbabwe needs going forward given the prevailing macroeconomic conditions? Well, to discuss these and other issues, I'm joined in studio by our very own investment analyst, Anesu Chumbumu. Anesu, good evening and welcome to the platform.
Thank you, Ivan.
Splendid. Let's get on to Untu Capital, a company that is listed on the FinSEC. Well, what would you want to take us through that? What's actually happening there?
So basically, being a bondholder, you're getting the chance to be paid back the amount that you had invested into Untu Capital. Mm-hmm. So with that being said, Untu is now paying back the interest that they had said that charged an interest rate of about 9% over the 12 months. Okay. So with the 12 months having expired, the 9% is now being paid back to the bondholders. But for the bondholders, it is not so much of a great news aspect, but rather because of inflation.
Of course.
Yes. So inflation has pretty much eroded the value that they had put in on the market when they actually initially took that bond. But it's a situation where it's better now rather than later, because if it was going to be later, the erosion of the value of that bond was going to go even to a worse extent than it is today, and it's a win for Untu Capital. So basically, it's a win-lose, but then it's a better situation for the bondholders currently. Okay,
talking about the funds that they actually got towards investment in ICT and other businesses of that sort, do you think that was a positive for the smaller businesses in our country? And were there any positives recorded in that regard?
I think it was a positive. It basically is essentially coming from a point of view where you find that the ICT industry was actually growing over the past 12 months. It has actually improved. We have a lot of technology companies that are coming in and providing different services, and also the existing technology companies that have been there have actually improved some of their services. So it was a good investment for them. I mean, it's a growing industry. It's something that Zimbabwe needs to keep on investing in, because we are a little bit shy of the global standards, if I'm to say, in terms of ICT development.
Okay. So just in circular to RTGS participants, multi-currency upgrade, addition of US dollars on the RTGS platform. What is the significance of that?
Well, basically they've just reduced the barriers of entry for those who had USD in their pockets. So basically with me having not to open an FCA or Nostro account, that makes it simpler for me, because there were some charges that I was not very comfortable with, and it was a little bit more harder for me to go throughout the whole process. But then now, because I can just transact via my normal account, it makes it much more simpler for my payments and other things.
Okay. Would this be perhaps a hint towards dollarization?
I think it's a very thin hint for me to actually give you a good perception of how that could be a hint towards that.
Okay. Now, Sable Chemicals to invest $25 million over a 2-year period.
Yes.
I mean, they're going against the grain. In the media, it's one story, but they seem to be quite optimistic in that regard. What's your take on that?
Well, I think it's a necessary move for them, because most of what they produce is actually a product that is used mainly in our agricultural sector.
Okay.
For products like maize, which is our staple food, and ammonium nitrate is a fertilizer that goes into almost any other fertilizer there is on the market. With them actually currently producing about 32,000 tons, it's not very viable for them, because that means their capacity utilization is about 13%.
Okay.
They have full capacity potential of about 240,000 tons per year.
Okay.
But then they're only operating at 32,000. So if they pull up their production to about 100,000 tons, that's just under 50%, which is about 42% of the utilization. So having said that, we have a government that has actually been putting a lot of pressure in terms of agriculture by coming in with these quasi-fiscal policies like you command agriculture.
Uh-huh.
And such demand on the market for an increased agricultural output has come to a place where the overall demand for the product has come to about 600,000, inclusive of those who've always demanded it. So with 600,000 being the higher, being the total demand, they actually want to aim for 60% market supply in that regard. And if that goes on, that means they're going to be making a lot of money, because a lot of people are going to be able to buy their products, because it will be somewhat cheaper in a regard versus importing some of the fertilizers that we use currently in the country.
Okay. I did mention the timing with regards to the macroeconomic side of things, but perhaps from a different perspective, which is the El Nino.
Okay.
Is this the time to be investing when there is such a negative report from a perspective of that geographical, or should I say geological side of things?
It's a very tough situation in terms of that geological aspect, because we do see that the El Nino has a huge effect. We have had a drought that had been going on from as early as 2001, thereabout, and that drought has somewhat contributed to the reduction of our production. So in terms of the geological, it's not a very good thing for them, but then one way or the other, things are going to turn out if we start investing also in other projects like irrigation and the like, because if we do ignore the fact that we are going to be in this perennial drought, it is going to be very much a negative thing for them, because they would have done much of their investment, but then payback on their investment is probably going to take longer than they expect, and I don't think that would be very.
So perhaps this is an investment in not necessarily in the short term, but maybe in the medium term.
Yeah, medium term would be a very good analysis, because I mean the company has been trying to do very well. They about 2 years back, they actually closed one of their electrolysis plants for them to be able to actually cut down on their costs, which which was a huge cost driver because they were for that plant they had to use about 104 megawatts, which is the power of a substation, and that cost was very, very torrential on their numbers, and that with them having done that, cut down on their costs and actually being able to make some good monies out of that, they're expecting for themselves to actually grow from that perspective, because beforehand they had been really, really crying foul towards this about that cost in terms of electricity.
Okay, progressive. First Capital Bank, formerly Barclays, is shelving the unbundling of Cassava.
Yes.
Why is that?
I think it's a simple thing. Currently, we do see that the macroeconomic situation of Zimbabwe is not very stable, to say the least. Because if they're going to be doing a capital raise at this moment in time, the value that they're going to be getting out of that is not going to be very, very substantial for them. They would rather have a currency that is much more firm, and a macroeconomic situation that is much more reliable for them to actually say that their capital gains are going to be very much noticed in the future if they make this capital raise.
Okay, I'll juxtapose them to Cassava. They are making a decision to go forward, while Cassava, the listing thereof is being shelved. Why the difference? Are these being too? Is Cassava being too optimistic, or question then being, did they actually get real value in terms of their listing vis-a-vis what we are seeing being decided upon by First Capital Bank?
I think there was much optimism coming from Cassava, basically because of the time and space that they actually then did the listing. Because at that time things were bad, but then we didn't expect them to go as bad as this. Well, to some extent, some business people would have wanted to believe that the current government is going to do things that are going to be very, very substantial for the economy.
Come in and save the day.
Yes, and come in and save the day and the like. But then with the situation with Cassava, there were a lot of other different issues within the corporate governance of the whole situation between Econet Wireless Global and Econet Zimbabwe and the like. So there's a lot of other factors that actually would have pushed for that the listing of Cassava at that time rather than what you are really asking about.
Okay, moving forward, what do these figures mean? The trade numbers for the year 2018 are out, and we're sitting at a trade deficit of $2.5 billion. What does that mean?
Well, as you can see currently, we actually had been slimming down our trade deficit from about 2012, which was a very good thing for the country. But then we do see that some of this slim down didn't have much to do with the growth in terms of our exports. But then we have a good significant show of the growth of our exports from about 2015 to 2018, where most of where the whole talk about the export incentives were coming in terms of the bonds and stuff like that, bond notes. But then disregarding that, we then see that we come to about a 4.4 billion export number. 30% of that is in gold. If we look at our gold stats, we do see that there was a growth in terms of our gold production from these years as well. So some of which has had a positive impact in terms of exports growing, but then our imports have been also growing at a faster rate. Our imports have grown at a faster rate mainly because of an import, luxury goods and consumptive spending. Unlike we see around the years of 2010 to about 2013, thereabout, there was a lot of capital investments that were being done, which probably pushed up our imports much to about 8.6 billion, which is pretty much the highest in the 8 years. So with those capital investments being done, which raised our imports. We then see that our imports started reducing because more and more companies began to produce, and the incentives began to come in and the like. So with those policies coming in, our imports did decline, but then now we're seeing that they're coming back up again because of a lot of forex shortages that are now constraining companies.
Hold on a second. Talking about forex shortages, I'm a bit concerned. Look, we're coming from a deficit of $1.7 billion in 2017.
Yes.
And in 2018,
we've come to
$2.5 billion. And if you're complaining about forex shortages, what does this mean for us going forward? Are we not supposed to be recording a decline? Or to add to that, remember that the new finance minister came in with the whole austerity for prosperity measures. Are there positives coming off of that, or where we headed? What does this mean?
Not to cut you too short, but then we do see that this increase also has much to do with the increase in money supply. There was a lot of TBs being printed at the time between 2017 and 2018. This is where most of the growth of TBs came in, much unlike the previous years where it wasn't very high. Now, between 17 and 18, there was an excess of about 50% growth in our TBs. So with that growth in TBs, that means money supply was going up. That means your purchasing power is also going up. Your ability to demand things is going up. So I begin to import things. Remember also that at that time, between 2017 and 2018, the US dollar was getting much more scarce. It was still there. There was still some utilization of it. And with that being said, our US dollar in quotes actually was a better currency for me to actually go and spend outside our borders, because I had a strong currency, and that meant I could import more. But then the more we did that, the less the forex was becoming in the country.
All right, fair enough. Okay, moving on to the stock market. I know it opened in the positive in the week's opening trade session. What's been happening there? Normally, when things are in the negative, perhaps in the economy and things like that, you see the stock market going down. But that seems not to be the case where Zimbabwe is concerned. It seems the more things worsen in the economy, it seems apparent that that's when we actually see a lot of activity on the stock market. Would you want to take us through that?
Okay. The phenomena that we're actually facing is much to do with investors finding it to be a safer haven for them to put their money in versus actually keeping it in the banks and putting it in other investments. Stocks would be much safer because if things then go up topsy-turvy, we come to a place where the investments come to probably almost zero in terms of value. And if they do put their money in stocks, that reduction in value is not as hard-hitting as it should be if they have no money within the stocks. But we do see that on a year-to-date basis, our top 10 stocks are almost up 10%, actually up 10%. So as you can see with Citgo International, especially it being also primary listed on the Botswana Stock Exchange, it shows some level of fungibility. Because if we do notice here, Old Mutual, which settled at about 905.36 cents today, it is also up 14.15%, which is almost similar to what Citgo is doing, because they're both are fungible stocks, Old Mutual being also listed on the JSE, but as a primary listing. But then we do also see that I'd actually made a mistake thinking that Citgo International was the highest, but then Padenga here is 23.53% ahead on their year to date. I mean, I think that's mainly because they exclusively sell on an international base. In terms of their crocodile skins and their alligator skins, they sell to Europe and the Americas. So with them having such a market, that brings in a lot of forex for them. That it should justify the rise in their price to about 105 cents. Yeah.
Okay. Well, it would be interesting to see how the week plays. But where do you think the market is headed? I mean, given what's actually happening.
Upward and onward currently. I think so, because we did come from a few weeks ago where the market was a little bit damp. Investors were still reopening their books and the like. the direction of the market wasn't really known. So activity on the local bourse wasn't very much up on the up to standard as compared to now. So with what's happening currently in the country, a lot of political upheavalment, there should still be an increase in the stocks, just as it did happen late last year in the final quarter of the year, when fiscal policies were released on with a very extensive statement.
Okay, amazing. Thank you. Viewers, thank you for staying with us. Don't forget to like, subscribe, follow us on Twitter, Facebook, and to visit our website www.equityaccess.net. From Anes and I, thank you for watching and good evening.